We all have been hearing about patience when it comes to trading, and we all know about that. But then there is this aspect of patience that most traders don't really know about. Now, let's take for instance, you took a buy position on a pay, and you set your stop loss at say 15 pips or 20 pips or 5 pips or 30 pips depending on your analysis. Now, this trade is supposed to actually go in your direction if your analysis was great, but then there is high probability that the trade will still hit you out before going to your direction. Why? It's simply because most traders have this mentality of, I want to buy now and I want this trade to start being in profit immediately. Like, I want to take this buy and I want it to be blue direct. I want it to start trading to my profit till it hits my take profit. And by doing so, you don't know you're already making a very big mistake. You know, this is one of the most dangerous mistakes that most traders do. They forget that the market is filled with lots of ups and downs. Markets can go up, come down, go up, comes down, and keeps repeating that. Meanwhile, you should know that if the market is in an uptrend, then the market will have one movement to the upside than the downside, and vice versa. But then most traders, what they do is that they enter a trade, and because they want this trade to go straight to their direction and it is not going straight to their direction, let's assume it is moving 1 pip, 2 pips against them, what they are doing is that they are adding extra positions unnecessarily. Now this position is already out of the plan. They are no more following their trading plan. So it's not just all about patience. You are out of your trading plan and you are being impatient with your analysis. You set your stop loss 20 pips from your entry, but then you couldn't be patient enough to just watch the market play out. When you finish an analysis, the best thing that can happen to you is to just patiently wait for the market to play out. Yeah, good. You already know how much you're gonna lose if it hits your stop loss, and you're okay with that before you say that. If you're not okay with that, you wouldn't have said that. You wouldn't have taken that trade. But you'll be very okay with that, and you are sure that it is very, very perfect for your account size, and it was not gonna consume your account. Now, where your mistake came in was when you started adding more positions unnecessarily, because the market is moving few pips against you. It moves 1 pip, you add position, 2 pips, another position, 5 pips, another position. Now, by the time this market is moving 10 pips, your account is already about to be blown. Either you are out of the market forcefully by closing your trades, or your account is blown. Now, your account got blown at just 10 pips. Meanwhile, your initial plan for that trade was that your stop loss was going to be at 20 pips, and that at that 20 pips, what you were actually supposed to lose was say 1% or 2% or 3, 4, 5% of your account. But you now ended up blowing your account at just 10 pips. Meanwhile, perhaps if you were following your trading plan and if you were patient with that trade, it could have gone way to your direction without hitting your health. Now, most of the traders, when they finish performing these actions, they get hit out by the market, and after like 30 minutes or 1 hour or 4 hours, when they come back to the market, they will see that the market moved well to their direction, and they begin to regret and feel bad or feel that there is manipulation in the market. Meanwhile, there is no manipulation in this market. You are just being impatient with that trade.